College education is one of the largest expenses a household faces. With tuition averaging $40,000 for private colleges and $11,000 for state colleges, higher education is a major cost that is only going up as time goes by. If you are a parent or grandparent of young children that you hope will one day go to college, the best thing to do is start saving for this expense as soon as and as smart as possible. Hello, I'm David Frederick, Director of Client Success and Advice with First Bank Wealth Management. In this video, I will briefly discuss some of the best ways to save for college education. In a separate webinar, I will discuss in much greater detail the value of higher education and different approaches to pay for its costs. The 529 savings plan is still the king of education savings. Anyone can contribute any amount to a 529 savings plan. Assets inside the plan grow tax-free, and distributions for qualified education expenses also come out tax-free. Some states allow a state income tax deduction for contributions, but right now there is no federal income tax deduction. The keys to making the 529 savings plan work is, number one, create the plan as soon as possible, and number two, make consistent contributions over the life of the child. A dedicated savings strategy to a 529 plan starting at an early age will give the child the foundation he or she needs to successfully fund higher education pursuits. A Roth IRA is also an effective means to save for college. While typically used for retirement, a Roth IRA allows a person to put after-tax dollars into an account that grows tax-free. The owner of the Roth IRA can then take out funds penalty-free to pay for qualified education expenses. There are some limitations. Only the owner of the IRA can put money in, and there are strict limits on how much he or she can contribute. But if the child does not actually end up attending college, the Roth IRA can be repurposed to provide for the owner's retirement needs. Permanent life insurance, such as whole life and universal life, can accumulate cash value as premiums are paid. The value inside a life insurance account grows tax-free, and proceeds can be accessed at any time for any purpose, including education costs. Life insurance is effective as an education savings because the value of a life insurance policy does not count against a student when determining his or her eligibility for student aid. If the child does not end up pursuing higher education, then the life insurance value can be used for other purposes, or the owner can simply maintain the policy and allow the death benefit to pay when he or she passes away. These have been just a few ways to save for higher education. For more information, please watch the webinar available with this video. And if you need any personal guidance or advice, please reach out to your financial advisor at First Bank Wealth Management. You can reach me directly at david.frederick@fbol.com. Thank you.